How's it going out there? I'm Mike, and I love investing within a particular niche within an industry or sector that is an emerging trend that I can just kind of ride on the coattails of, and then finding the best in class company within that particular niche. And I think one of those niches that is had a lot of growth already, but I think is just poised for continued explosive growth is the cybersecurity industry. And the company I'm going to talk to you about today is a cybersecurity company that has also played another big trend, and that's cloud computing. And that company is Crowdstrike. If you like this kind of content, please feel free to subscribe to the channel and like the video. And let's get on with it. So Crowdstrike offers a fully cloud-based software as a service endpoint cybersecurity solution through their Falcon platform. And by endpoint, I just mean mobile devices, computers or laptops where threats can get into the device. And I guess any IT nerd will probably tell you that endpoint cybersecurity solutions sort of and companies kind of come and go. But I do think Crowdstrike is different. Being cloud-based, where it's continually monitoring data, and how they're continuing to invest in research and technology, and their AI technology that is actually continuing to learn and adapt 24/7, I think actually sets them apart and makes them different. So their direct competitors would be companies like BlackBerry with their Cylance or VMware, and then other just legacy typical plug and play antivirus software. And you might hear other, I guess, cloud-based cybersecurity companies like ZScaler or Cloudflare, and they're actually like respectable, high-growth cybersecurity companies in their own right, but they're actually not direct competitors to Crowdstrike. They actually work within a company's internal network, and a lot of companies will actually hire or use the services of both ZScaler, for example, and Crowdstrike. Actually, as you can see here on ZScaler's website, they actually talk about the partnership and how the two offerings actually work in partnership in unison to provide a full coverage of cybersecurity. All right, so this is what I'm talking about when I'm saying ride the coattails of an industry trend. So cybersecurity itself globally is about a $200 billion industry currently and growing 10% a year, but Crowdstrike's reporting on the specific component within cybersecurity that they operate in being about a $32 billion industry right now. And they only have, with about $1 billion in revenue annually, about a 3% market share then. So even though they're accumulating customers like crazy, even if they weren't, they're in a great position to just sort of ride that growth as far as increased spend on cybersecurity, especially cloud cybersecurity. But they're going to take a lot of market share. There's a lot of old legacy players in there with old antiquated software that needs to be upgraded. There was a huge rush to the cloud. Everyone adopted the cloud, and IT is way underspent on the cloud right now. So IDC reports that about 10% of your IT spend should be on cybersecurity. And in the cloud sector and all this expansion that's occurred, it's way down. It's about 1%. So Crowdstrike thinks there could be about a 10x in the next 3 years as far as cloud cybersecurity spend. And this is here I think is amazing. They've had year over year subscription customer growth of 85% from 5,431 customers last year to 8,416 customers this year. And you can see even last year it had more than doubled. So it was more than 100% from 2019 to fiscal 20, now fiscal 21. So just incredible growth. We're talking about over the last few years, about an average of 100% of subscription growth per year of new customers. Pretty incredible. So we're talking 49 of the Fortune 100, 11 of the top 20 banks, like Goldman Sachs is in there, Hyatt Hotels, Zoom use them as they expanded this year. So just impressive stuff. And just looking at their Crowdstrike's most recent quarterly report, their Q3, which ended October 31st, 2020, They had just over $232 million in revenue on the quarter. That was up from 125 million on the same quarter last year. So pretty incredible stuff. I hate it when they don't put the percentage in their reports, but anyways, that is you think you'd want to put it. It's such a big number. That's actually 86% revenue growth, and they've actually given guidance for Q4 of 245 to 250 million. So actually an acceleration going into the end of the year. So I wouldn't be surprised if they're close to that 100% year-over-year revenue growth by the end of the fiscal year. And the thing about CrowdStrike is the last handful of quarters, they just killed it. They've actually destroyed their guidance. So I wouldn't be surprised if they do that again. But I love seeing that in a company when they underpromise and overdeliver. You can see they are still operating at a loss. So a net loss of 11 cents per share on the quarter. And that's actually still down though from minus 17 cents, the same quarter last year. So losses are actually decreasing, which is good, getting closer to profitability. It makes sense that they are not profitable as they've grown their subscriber base so quickly. They have to rapidly invest in that cloud infrastructure. But I think, so it makes sense they're going to be, near net zero on the balance sheet. But I think long term they'll be able to flip the switch once they've sort of built out that infrastructure. They are a pricey company. Ultimately, if you look at like their price to sales ratio to Glass or something, it's alarmingly high. I think it's like 60 times sales, and that trades pretty similar or slightly at a premium to say a Zscaler or a Cloudflare. Thinking of companies in a similar industry and similar growth. Well, actually, I should say like slight premium, and they actually have slightly lower growth. So CrowdStrike does have the higher growth. So I think they deserve that premium. Just a couple quick final thoughts. I know if you look at any standard financial metrics for CrowdStrike, it looks expensive, but with the price to sales ratio that any value investor is going to scoff at, but you're going to pay up for best in class. You're going to pay up for explosive growth. And waiting for a company to be a good value that has this kind of growth, you would have missed out on Amazon, you would have missed out on Tesla, you would have missed out on Shopify. I could go on and on. I'm not comparing it to those stocks, but it's just, there's huge potential upside on these explosive growth companies that never become a value until, many years later perhaps. But during the growth phase, they're not going to be cheap. So just keep that in mind. I think there's a place for these high growth stocks that may be a high value as well in everyone's portfolio. Anyways, thanks for watching. Remember, always do your own due diligence and research before investing, and happy trading.